proprietorships and partnerships. I'll do another chapter and do a deeper dive into corporations and LLCs. But for right now, we're going to focus for a moment on sole proprietorships and partnerships. So both of these entity types, we need to be concerned about the issue of personal liability for the debts and obligations of the business that you're wanting to run. So, and by that I mean if something happens, if you don't pay a bill, who could be sued and who could ultimately be held liable for the debts. Your personal assets could come into play in that scenario. So your home, your car, any other holdings that you may own personally, if you are a sole proprietorship or a partnership and you are sued, potentially those could come into play to offset the debt. More importantly, it's easy to note that I don't want to knock sole proprietorships or partnerships as bad entity types, because they're not. They serve a valid, useful purpose in the right platform. They're very easy to start. You basically just wake up and say, I'd like to do something. And in so much as a partnership, you just have your partner, you guys decide to do something, and you just say, well, this is how we're going to share and split things up. So that's that. Unlike corporations and LLCs, you don't file anything with the Secretary of State in the state that you live in. You probably still will keep books and records, for your financial details, but you will report those on Schedule C, profit or loss from a business, on your personal return. And I think the formula is about 92.5% of the profit will be subject to a self-employment tax in addition to the income tax. So let's talk about the self-employment tax issue there for a moment. So when you're a regular employee, you have a paycheck and you have federal withholding, Social Security, Medicare, and then state withholding if you're in a state that has that. Those are deductions from your check. So the federal withholding and the state withholding are deposits or credits that are used so that when you finalize your income tax return, those credits apply to the income tax liability that's calculated. But the Social Security withholding and the Medicare withholding, those are really kind of like towards your Social Security benefits and Medicare benefits in the future. Those are interesting because those are what they call payroll taxes that your employer actually matches. So whatever you're putting in, your employer is matching that on the backside. And that's 6.2% and 1.45%. So 7.65% of your gross pay each period is taken out between Medicare and Social Security. And your employer is doing that. So 15.3%, 7.65 times 2, 15.3% is the self-employment tax. So when you're self-employed, you don't have that benefit of having that Social Security deducted from your check or the employer side, so they get you for it. So the self-employment tax is actually that piece, that 15.3% that otherwise would have been collected and deposited had you been a traditional employee. So I want to be clear on that that's for that piece. It's not an income tax. It's called a self-employment tax that goes towards your railroad account, Social Security, and your Medicare. The income tax is a separate ball, but everybody knows about the income tax. Partnerships, it's going to be the same way, with one slight difference. You probably will get a K1 as opposed to filling out that Schedule the Schedule C for your personal return. You'll get a K1 return, or a K1 from the 1065 form, which is the partnership return. So for the sole proprietorship, you'll do your Schedule C is your tax return. For a partnership, you actually have a separate tax return that's filed. It's called a 1065, and from that, K1s are generated, one for each partner, and then that's for your share of the business income or losses, and then you report that on Schedule E on your personal 1040 form, and then it'll be subject to self-employment tax as well, because you're not, it's just the way it is. It's going to be subject to self-employment tax, unless you're in one of the few businesses that are exempt, and I think real estate's one of them that you don't pay the self-employment tax on. Anyway, so important to note that they're very easy to start. Can do them basically overnight. You have the option of getting an EIN, tax ID number, if you want. I would recommend doing that anyway. You potentially have to be concerned about personal liability. Your personal assets and holdings could be used to offset any debt that you may otherwise incur that you get sued on. And the taxes, you're going to be having to look at, that self-employment tax. Otherwise, you would have remitted through and share with your employer vis-a-vis the Medicare and Social Security withholding in your checks. They're going to get that anyway. And the formula is 92.5% of the profit is subject to that 15.3% tax. And then in addition to that, 100% of the profit is taxed at your income tax rate, whatever that happens to be. So I hope that clears it up with a little bit on the liability and on the tax situation. Very easy to start, very informal, no Secretary of State filings. Definitely need to get a business license. Probably you're going to want to get a different address to use so that at least in the public domain, at least your personal residence and things like that are not out there for the world to see. Go get a business address, a valid, and use that, and pay your business license, your occupational tax license, whatever it is. It could be $90, $100 a year. It's quite, it depends on your revenues and it depends on the industry and things like that. But they're quite tolerable in that regard. And then you're set, and you can do business that way. Any questions? Let me know. Don't forget to smash that thumbs up button, please. Subscribe to the channel and hit the little alert button, the bell, so you can get alerts and notifications when the next chapters come out. Thanks a lot. Hope this helped you. Email me anytime, liquor.ceo@gmail.com. Look forward to hearing from you guys. Have a great day.